Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Jake Poses of Jumprope coming to us from New York City. How's it going, Jake?
I'm good. It's great to be with you.
Thanks for your time today. Appreciate it. So cool name. What is Jumprope?
So Jumprope is the place to come to discover how to do anything, whether it be a recipe, beauty tutorial, parenting hack, craft project. We want to be the place where everyone goes to learn or discover how to do anything, and also be the place where we make it super easy for people with knowledge and passion to share their tips, tricks, knowledge, hacks from their kitchens, garages, backyards, etc. And so we make it easy, super easy for anyone to create a step-by-step how-to in a format that is way easier and more user-friendly for those who want to discover how to do anything.
Yeah, I spent a little time on it. So it's almost, if I was to almost paraphrase, it's like Pinterest meets, I'm not sure what the predecessor of like how-to sites, some of those about.com.
Yeah, well, I'll give you a little bit more context then. I think the use cases of Jumprope are very similar to the reasons why people are going to Pinterest, right? Recipes, fitness tips, beauty tutorials, home DIYs, etc. So some very much out there. What we've really done is taken the magic of Instagram stories and the step-by-step tappable, move at your own pace nature of that format and brought it to how-to content that has traditionally been consumed in longer linear videos. So, 5 to 15 minute videos that you see on YouTube, and in more blog post style content that you see on a WikiHow or, blogs that have existed forever. And my sort of thesis here with Jumprope is that step-by-step format that really was pioneered by Snapchat stories and then really run with by Instagram stories applies really well to the inherent step-by-step nature of learning how to do something, because you do want to be able to move at your own pace through that content, and the steps of doing something inherently align quite well to that stories format. On top of it, the magic of stories is that it makes it really easy, or way easier, for people to create content, right? Creating video is really hard. It's an open-ended format. You need a bunch of experience with video editing tools. And our belief is that you shouldn't need to know how to edit a video to share your knowledge and passion. And so we've built a very templated step-by-step editor in our app that really takes away all of the need to know any video editing stuff and just lets you focus on capturing your steps and sharing that knowledge, passion, tips, tricks, etc.
And how long form, or are they all fairly short form lessons or tutorials?
Yeah, they're all fairly short form. So typical things would be, learning how to, make a cool batch of, mint biscotti, or how to scallop edge a pie from sort of the recipes category, to doing a cool spring planter box, for home improvement, to a smoky eye look for makeup. So the typical Jumprope most of them tend to be between about 5 and 12 steps. Some of them are longer and more involved, but that's kind of the typical Jumprope.
And each step is a short video, or how long can each video be?
Yeah, so we've defined, and the way we've thought about a step is we've really thought about how do people really learn and discover how to do things. What are the best practices? And we talked to a bunch of people who are best practices and the way people learn information. And what we sort of got to was the power of a little bit of text plus a photo or video is a really powerful explanatory mechanism for when you're trying to discover or teach someone something. So a step of a Jumprope is up to 100 characters of text. So, a sentence or two, plus either a video of up to 30 seconds or a photo. And so, some things can be communicated really well in just still images and some text. Other things, photos and boomerangs really bring them to life. And we've limited it to 30 seconds because we're trying to do that and helping the creator synthesize that step down to something that is discrete, in that we don't want to let you go on for 2 minutes because that's actually not making it super user-friendly for the person who's discovering how to do something from you. And what we've done is for things like food and crafts and even beauty, where it actually takes a while to do it, we have built like time lapse or speed up mode into the app. So we give you editing tools that let you kind of speed up, mixing batter or sort of blending in makeup from something that is 2 minutes of elapsed video down to something that's like a much more engaging 15 seconds.
Yeah, that's cool. I'm going to explore this. I don't know if it would be a fit for us, but we started to create like a how to raise capital series on Udemy and got about 2 lessons in, and it was just too much. And we gave up like a year ago. So this could be kind of fun to just explore.
It could be great. And I think like, on LinkedIn, LinkedIn wants more video on the platform. It is definitely getting favored by kind of the LinkedIn algorithm. And so someone messaged me the other day and said, I didn't think of LinkedIn as a logical place where you could export your jump ropes. You could export your jump ropes. We definitely knew Instagram was going to be a big place. Knew YouTube was going to be a big place. Knew Facebook was going to be a big place. But she told me that she put her jump rope video on LinkedIn and has gotten 8,000 views already on that piece of content. And so there's definitely, for that more kind of the type of content that you would make, I think LinkedIn is logical. And probably we should have touched on that. One thing I should mention about the product is we have a creation tool in our app and a first party consumption experience in the Jumprope app or on the Jumprope website. But we also make it really easy for you to export your content to sort of any video format. So when you publish a Jumprope, we basically take your content and compile it into a number of different videos for you in different aspect ratios. So we give you a horizontal video for YouTube, a vertical video for IGTV, a square video for that works really well on Instagram or Facebook. We even give you an image file for Pinterest, stories. And so we solve the problem for creators today, both of it's really hard to edit content, but also if I'm going to edit it in a normal video editor, I'm only going to get one aspect ratio of that content. And to reach an audience across all these different platforms, we give you that content in a variety of different formats.
Yeah, that sounds cool. That's great. So what's your backstory, or where's the genesis story of this idea? What were you doing? How'd you come up with this?
Yeah, so my backstory is I grew up in New York, worked on the East Coast for a few years, moved out to the Bay Area in the fall of 2010 to go to business school at Stanford. One of my rationales for moving out to the Bay Area was I thought I like building things, and I thought I wanted to be part of that ecosystem. I ended up stumbling on a startup named Thumbtack as a place to work over the summer, thinking I would spend 10 weeks there as an intern. Ended up dropping out of business school at Stanford and spending 5.5 years at Thumbtack, and was lucky enough to go on a ride of building a company from 8 people to 500 people, no funding, to raising more than 200 million of funding at a unicorn plus valuation. My role there was I started as the first product manager and built and led the product design, analytics, and data science and product marketing team, responsible for how do we acquire customers, what's the experience like, and how do we make money. So amazing experience. Decided wanted to be back in my home city of New York and wanted a shot at starting my own company. And so was taking some time off to sort of chill and travel and decompress from what was 5 kind of fun but hard years of building something. And was using Instagram stories a ton just to tell stories about what I was seeing in the world, and had the realization, as we sort of alluded to a while ago, that format of stories applied really well to learning how to do things, which is something I've just always been passionate about, watching shows like Modern Marvels and how they built it. And that was kind of the genesis of the idea for Jumprope.
When I'm at the gym, I will often turn on How It's Made. I think that's on Discovery or PBS. I'm not sure. It's brilliant. It's so engaging. It's really fun.
Yeah.
Right? Yeah. Great job. Very cool. What happened to Thumbtack? I don't remember the outcome of that. Are they still around, or?
So Thumbtack still is a private company. Building awesome building, awesome product and growing, and with, tackling the giant category of the sort of professional service of like, how to hire anything from, a plumber to a math tutor to a wedding photographer. And the company's still doing really well.
Cool. Very cool. And what's the, jumping around a bit, what's the business model on Jumprope? Is it advertising or something else?
Yeah. So we will be ultimately ad supported. I think like, in a similar way to lots of the other like two-sided content platforms. The type of content we have on Jumprope is highly attached to a lot of purchase intent, right? Beauty, crafts, fitness, food. And, I think we don't know yet exactly what the ad formats will be that ultimately, are the right ones, whether it's sort of more of a commerce or affiliate model, more of a branded, promoted Jumprope's model. But we believe the right long-term monetization is ad supported, just like it is for most of the analogous companies that have come before us.
Very interesting. How many categories do you guys have today?
We currently have about 15 categories. The biggest ones are food, beauty, fitness, crafts, and like home and garden.
Yeah, cool. All right, let's get to the fundraising. It's really interesting business. How much have you raised and how many rounds?
We've raised $4.5 million so far, and that was done in 2 rounds. We did a $500,000 pre-seed, what's often come to be called pre-seed.
Yeah.
$500,000 on a note, really at the inception of the company when I decided I wanted to spend some time exploring this idea. And then once we built an early version of the product, and I got conviction that there was really a huge opportunity here, we then raised a $4 million seed round as the kind of second tranche of capital.
Cool. Let's take it chronologically. So this pre-seed, you had probably just left Thumbtack. I was just on a call with a guy 10 minutes ago, and he was asking me like, what's it going to take to raise a pre-seed? And I was giving him my advice, but maybe tell me like what were you pitching and how did you go about raising a pre-seed? I think pre-seed confuses people. Like, what does it take?
Yeah, I think it's a very inside baseball Silicon Valley term. I think how I would define for what Jumprope was a pre-seed is it's a generally like relatively small amount of capital that gives you some money to do exploratory work on an idea. And I think investors' expectations are you are going to probably build something like an MVP, get a few customers or a few people using a product, and really validate to yourself as well as them is this an idea worthy of a lot more time and a lot more capital? I think I was in a very fortunate position. And I think I was fortunate because I had a bunch of relationships with investors that I had built, through personal friendships as well as having, been a part of a company that was successful at Thumbtack. And I also had some credibility having been part of a successful company and playing a central like product role in that company. And I think largely for me, our pre-seed was raised on the backs of people who were interested in investing in me as much as it was people investing in Jumprope. I think that people were excited about the space of Jumprope, but I think much more so they were excited about investing in someone who they thought would be a good founder.
Okay, that's good because my advice to this guy was at the pre-seed, they're either investing in you and they know you and your track record, or they have a personal connection to the problem you're solving and they want to see it come. So you've at least corroborated to some degree the advice I gave him. That's good. Mm-hmm. I feel like I'm not giving bad advice. And did you just tap your kind of personal network, folks you had built? Did you have to run a process? Were you informally circulating this concept? Tell me like the nitty gritty of actually raising it.
Yeah, it was a relatively informal process. The vast majority of the money we raised frankly, in both rounds, but certainly the pre-seed goes for this, is from people who I knew for at least several years, if it's not longer, before starting the company. I did raise some of the money very purposefully from some people that I didn't know. And because I moved from San Francisco to New York, I wanted to have some people involved in the company early who were closer to the New York startup ecosystem, as I just thought those would be good relationships to have. I think one thing I've thought about in like who I want as investors is like, who can help me, right? There's like, at some point, like capital is helpful as it's money. And there's nothing wrong with capital that's just helpful because it gives you the money to go build your business. But if you're lucky enough to have the choice, how do you surround yourself with investors who you think can, or at least how I thought could help me build Jumprope? And so found a bunch of great founders in New York who sort of consumer internet founders in New York who I thought, I want to give them some skin in the game because I'm going to likely need to pick up the phone and call them and ask them for help. And I think whenever people, even if they're writing a small angel check, if they feel like they have some skin in the game, they're more likely to go hustle for you and do you a favor. And those favors are really important in building a company.
Did you identify what help you needed and then sort of recruited to match that, or you just were looking for people who you knew could be helpful?
I would say I actually probably should have been more thoughtful about that. I think now, a year and a half, a little more than that into this journey, I actually wish I had been more thoughtful about exactly what type of investors could actually be really helpful in the early stages of the company. I think I was optimizing more for just getting good, smart people who had some connection to what I was building, but I absolutely could have been more strategic about that.
Good. PitchBook is telling me that Shrug Capital was that on the seed round or the next round, the pre-seed round?
The Shrug invested on the next round, so on the $4 million seed.
Gotcha. Okay, gotcha. Well, let's talk about that one then. So that's a much larger round. Again, same kind of question. Did you just sort of tap your network? Did you run a process? And maybe if you want to comment on like raising in New York versus San Francisco, I think that would be interesting for people to kind of hear what are the differences.
Yeah. So I think on that round, I didn't start out thinking that I was going to raise a $4 million seed round. I actually started out thinking we would raise substantially less money, more like somewhere between kind of one and 2 million. And one thing a bunch of people kind of advised me on as part of that process is that it's going to take longer than you think it's going to take to reach these next set of milestones that you're going to need to prove to get to the next set of, get the next round, et cetera. And if you have the opportunity to raise more money, it's probably a good idea to do that because it will take longer. And I think now a bit of time into that, I think that advice was totally spot on. And I think I'm both lucky and maybe a little bit smart to have taken that advice and had the opportunity to raise that much money. Because I think having that flexibility of more capital is really helpful and lets you hire better people, lets you have more at-bats to iterate on the experience, et cetera. In a lot of ways, process-wise, that one went somewhat similar to the experience on the pre-seed round, where it was largely tapping my network, talking to people who I'd frankly talked to a bunch about the company, even between the pre-seed round and the seed round, and had been tracking and following and, even playing with the test flight versions or, beta, really like non-live versions of the product. And really went to them and just like communicated, what have we learned? What is the vision? Was, again, fortunate enough to have had a bunch of people who were excited to back the company. in terms of the New York versus San Francisco thing, most of the money we've raised at Jumprope is from investors who are in San Francisco.
Okay.
In fact, the vast majority of it is. I don't know, but easily 80-90% of the money is from institutional investors on the West Coast. My sense, I don't have perfect data on this, but anecdotal sense is that West Coast VCs have a little bit more vision than the typical New York investors, and that they're more accustomed to thinking about ideas that are quite early in their evolution and having the vision along with a founder to see how this could be a giant 10, 20, $30 billion company. And I think there's a little bit maybe it's like a little bit more pragmatism among the New York-based VCs, that there's a little bit less of that, in part because they haven't been around the companies that have come before Jumprope, right? Like the vast majority of the companies that like we see as the mega companies that we're trying to follow in the footsteps of, whether they are Facebook, Instagram, YouTube, Quora, Musical.ly, which then became, sort of as the predecessor to TikTok. Those are West Coast companies.
That's interesting. Yeah. I've heard that in different kind of shades of grades and shades, things similar to that. They're more financial based and more, numbers based sometimes. Like, yeah, that's interesting.
There's also I think there's also still just, and I don't, you may know the math on this or the numbers on this. There's still just a lot more capital in San Francisco. There's a lot more venture firms in San Francisco. It also happened just be where I had relationships, and sort of flipping to like one of my best pieces of advice that I've given other founders around raising money is don't start building a relationship with a VC when you need to ask for something. Mm-hmm. That you should be building relationships with VCs before you want anything, and that it's a very different conversation with someone. It's really any human. This is not a VC thing. This is like any human when you need to ask them for something, is if they feel like they know you and they've gotten to know you and followed along with who you are or what you're doing before you had to ask them for something, they're more likely to like want to give you their attention and pay attention when you do need to ask for something. The other big advantage of talking to investors before you need to ask for something is you can lay out for them, here's what to expect of me over the coming N months. And if you then go to them and say, hey, remember we talked 6 months ago, I said I was going to do A, B, and C, and we're going to reach milestone Z in that time. They're just like, oh yeah, you're right. You did tell me that and you did that. So you delivered on something you told me you're going to do. I now have more confidence that you're going to deliver. If I invest in you, you're going to deliver on that. So that's just a pattern that I've seen. And I think one of the things that made for us when we raised between the pre-seed and the seed round is, when we raised the pre-seed, I said we were going to do a set of things, and we had done those things at the seed round. And that just doing what you said you were going to do, it's credibility building.
Those are good nuggets. Do you say something like, hey, I'm not raising money right now. I'm going to raise in 6 months from now, but I'd like to kind of tell you what we're doing and what we're going to be doing? Like, sort of a two-part question. How do you sort of start to build those relationships when you're not asking money? You had the benefit of working at Thumbtack, so you probably got to know a lot of people, but like for people who, don't have that, any thoughts? Like,
yeah, I think that my advice is yes. I've been lucky that a bunch of people I knew, and so it was very easy, casual relationships. But there have been specific people who I'm like, I think that this person could be a great investor in Jumprope, and I want to actively build a relationship with him or her because of that. And generally, in that case, what I try to find is like, I try to find a reason to ask them for help on something specific right now. Hey, I know that, I know that you've been involved in these companies. We're building something that has threads to them. I would love to get your advice on these couple things. Do you mind grabbing coffee or jumping on the phone for half an hour? And so that gives you a chance to tell them about your company in an authentic way. You also legitimately like get their advice and help for free if they're willing to take that meeting. So I think it's actually a trick. I've used this trick with hiring people before. Asking for advice is a great way to, people are predisposed to say yes when you want to ask them for their advice and to sort of lean on their expertise. And it's a great way of getting your foot in the door and getting a coffee that helps you build a relationship. I would say the other thing in those conversations is don't then go into those conversations and start pitching and be vulnerable. I think that's another lesson I've learned is like, certainly as a pre-seed company, as a seed company, I'm sure as a Series A company, no one expects that you as a founder have all the answers or that your company has figured it all out. And don't be afraid to say, I don't know, or we haven't figured that out yet, or that's still a big challenge. If I was an investor and someone walked into a meeting and told me nothing was a challenge and they're a Series A company, I wouldn't believe anything that they told me because of course there's stuff that is a challenge. So by admitting you don't know things, by admitting there are challenges, I think it actually increases your credibility on the things where you actually like do have confidence and conviction.
Interesting. Good. And who led that round? If you're okay saying
the pre-seed round was led by no one. It was sort of a collection of people. The seed round was led by Lightspeed.
Got it. And I saw a Shrug on there. I've met Niv maybe just once or twice casually. I thought it was funny when he launched the venture fund with the what did they call it? The emoticons, where it's the
yeah. Well, he actually has an emoji, the old school like text-based shrug emoji as a tattoo.
Oh yeah.
And then he launched Shrug Capital, which is the shrug emoji. It was a small check in our seed round, but he's been exceptionally helpful and would recommend him any day of the week to a consumer founder.
Very cool. What, I don't know if you have any thoughts on that topic being helpful. How do you tap the investors that you did raise money from? You probably have board meetings? Do you do anything outside board meetings to sort of activate your investors?
So we actually don't have board meetings. We decided just like that the formalities of a board at this stage of the company weren't necessary. I think that's actually, it can go either way. And I think actually more commonly, if you're going to raise a $4 million seed, you will end up having a board. But we decided that given there was a longstanding relationship, given sort of my experience, that it just like didn't feel like the right call to put in place those formalities. So there's no formal board meeting. What I do is I write a letter to our investors at the beginning of every month. And what I try to do and actually my principal reason for writing that letter is not because they need or have the rights to all of this information. It's to do two things. One is to keep them engaged in the company. And two, as a moment for me to step back as a founder and just synthesize for me and our team what has happened over the past month. And like I send that same letter to our whole team, contractors and full-time people. And it's just a good chance for me to step back and synthesize. And what I've tried to do in that letter is give a sort of high-level summary at the beginning of metrics, things that are going well, things that aren't going well, and then pick one thing each letter to sort of deep dive into and give them a bit of insight into like something specific and how we're thinking about that specific issue within the company. And for them, it's like reading a blog post. It's like a cool way to get insight into how is one founder thinking about a set of problems. And people have said they've really enjoyed that. And then at the bottom, I put a section of like specific ways that we need, that I think like they as a collective group can help us. Then of course, on top of that, I am reaching out to specific investors when I have specific questions or specific needs where I think they may have some expertise or know someone to help.
What's an example? You don't have to give the specifics, but like that deep dive topic, that's kind of a cool concept. I haven't really heard that before. Yeah.
Yeah, I think like one of the a good example that we've dove into with our investors is basically, we've made this bet on saying we're going to do programmatic video generation of taking the content created on Jumprope and creating all these different format videos for our creators that they can share. And just walking them through at a high level, what's the logic for that relatively big product investment? Like, why are we making that investment? And then just like technically, like what, at a high level, technically, like what do we have to build to make that happen? Yeah. Another example, I try to dive into I try to think about the thing each month that's the most important strategically. Right? Like the operational details of the business are less interesting to them. Mm-hmm. It's more of giving them insight into the strategic choices we're making.
Yeah, that's good. And do you get much response, or is it more just keeping them in the loop? I mean, do you?
I would say invariably get a little bit of response. I mean, I think it's, some of it is, great job, keep on going, sort of pat on the back. Often we'll get, unsolicited, like, like I have a friend, or you should talk to this founder because she or he has thought about this similar idea. We'll get specific answers back for the specific things we ask for help on. I would say I wish I got a little more engagement from them. But I also realize that the majority of our investors are either on the board of a bunch of other companies that they have bigger investments in, or they are founders or product leads at companies where they have their hands full. And so This is not their day job.
Yeah, but I think
if I had felt like I wanted more like day-to-day, week-to-week help from someone building the company, I would have actually picked a different investor.
Yeah. But I think your other kind of reason for doing it, or doing these monthly updates, the moment to sit back and synthesize everything that's going on, that's really valuable, and people don't really think about that as much, right? They just think of this as a duty and not so much as a way to reflect on the business.
I learned that at Thumbtack, that there was almost every board meeting we had, in some ways we thought of them as book reports where it was like, why are we doing this? But in other ways, at least one or two things we would be like, oh, we wrote a slide on that for the board deck, and we really hadn't thought about that at that strategic level before. And there was something we did every quarter for the board meeting in synthesizing everything that was going on in the company that made us look at something differently than we had been without that step back forcing function.
Yeah, that's good. Very good. All right. Well, this is pretty interesting. Any other tips or advice you like to dole out, or things you would do differently if you were raising again? Sounds like these rounds came together pretty easily. So
yeah, I think, like, listen, we've been lucky. I'm sure there will be horror stories in the future. Knock on wood, there won't, but I'm sure there will be. I think another piece of advice I got that I found to be really valuable, and I've tried to like put in place, is to try to align your fundraising with the expected milestones in the company's trajectory. And I think that if you just look at like the law of averages, and like, the average, someone raises money at this point and they raise this much money at that point, that much money at that point, that is really like the amalgamation of a bunch of a wide distribution. And I think the founders that I've seen have done this best are ones that think about, okay, what's the next proof point that de-risks my business to an investor, or to myself for that matter? And how do I think about what's the right amount of capital plus a large margin for error, or reasonable margin for error, that I need to get to that next milestone? And it's kind of like, if you don't raise enough capital to get to the next milestone, you're you could leave yourself in a fairly precarious position. So that's just one thing I've tried to think about, and I think is a good piece of advice that stretches across things.
And for milestones, is it number of customers or revenue or, growth rate or product, or I don't know?
I think it totally depends on where you are in the trajectory of the company and what type of company you're building, right? For us, it was clear that like in going from the pre-seed round to the seed round, it was not going to be revenue, right? That was not even remotely feasible. But like having a product that someone else could play with and who didn't quite have the amount of vision that I had, and saying like, okay, I see what this experience is like. I see real content in this product. I can feel it. That really like de-risks a lot of things, right? It de-risks like, okay, I understand this thing now. I think that in certain businesses, I think like, for example, I've never played in this space, but in a SaaS business, there are these kind of rules of thumb around ARR that you kind of have to get to unlock the next phases of capital.
Mm-hmm.
That doesn't happen to be the right framework for us though.
Yeah, makes sense.
For me, I think it's really about like, have I proven something, right? Like for us, the next milestone that we're jamming towards is, can we prove that we have built an experience that makes it that people who want to share their knowledge, tips, tricks, and hacks love using to create awesome how-to content. And that like hitting that milestone is, signified by getting thousands of people each month to create, how-tos with Jumprope, right? So like at that point, we've put a metric or a goal on, but it's really, that metric is emblematic of proving to ourselves that like we have built something that has a certain utility to an audience.
Yeah. Cool stuff. All right. Well, this is really good. I think I'll let you go there. If people want to learn more, watch some videos, how-to videos, create some how-to videos, it's jumprope.com, right? Or dot.
Yep. Yes, you can check us out on jumprope.com. Just search Jumprope, one word, in the Apple App Store. Not available on Android yet. If you know any great Android engineers, please send them my way. We believe we've made it really easy for anyone without any video editing experience to share their knowledge and passion, whether it's about how to raise capital, how to cook a certain meal, how to do a beauty tutorial, how to do a craft project, and are excited for everyone to check that out and believe that the world is a richer, better place if everyone is able to share what they know. So we encourage you to come Jumprope and share some knowledge. And even if you're just interested in discovering how to do cool new things, check out the app.
It sounds cool. I think I'm going to give it a try and maybe create a little fundraising tutorial. So I might be one of your new users, one of those.
I'm excited to see it.
Very cool. All right, Jake, thanks so much. This is great. Good luck on everything, and we'll catch you after your next round. Appreciate it.
Thank you.
Bye.
Bye.